Thank you. Okay, can you see the slides?
Yep, very clear.
Yeah, okay. Okay. So you can
All right,
start.
so I think briefly we're going to have a conversation regarding affordability.
Yeah.
Yeah.
Great.
And specifically about the impact of the raising of the buffer rate. That's just a recent thing that APRA has initiated. So firstly, I just want to say the intention of the buffer rate change is to increase affordability. Whether or not that that actually eventuates, that's a different question. So just to let everyone know, basically the change will increase the interest rate buffer from 2.5% to 3%. So that's the general principle. So for those who don't understand what buffer rate is, it's essentially an artificial rate that banks will use to assess serviceability on loans. So for example, if the interest rate is at 3% and previously they would apply a buffer rate of 2.5%. That means that they will assess your loan on 5.5%. So this change of 0.5% just means that they will assess the servicing on 6%. Yeah.
Yeah. Okay. One question, and I'm wondering the buffer rate is just this buffer rate are increasing. Just to give a potential investor a sign. Just is it potentially increase the buffer rate in the near future?
Well, potentially, but I think what it signals to the market is that part of it is also for show. So part of it is to show the market that they're active, because if you look at the regulatory bodies, RBA is sort of caught in between a position where they can't actually raise their interest rates because they need to restart the economy. So if they were to increase the rate, it would have a severe impact on economic activity in other trades. But at the same time, everyone has witnessed in the last 12 months an incredible surge in property prices, and that is not located in just one city. We've seen that, Melbourne, Sydney, we all know that it's surged past 20%, and 20%. These figures are they're attention grabbing, right? Big headlines in newspapers. Everyone can see that. So really, it is, in my opinion, it's about quelling the masses, in the sense that a lot of people, especially the young people, they will start to feel quite disenfranchised. They feel that, how am I going to afford a property? How can I buy a property? If properties are increasing at 20%, consider this: properties has increased 20% in an era where there's been basically zero migration. So no migration, right? And yet the prices have increased this much. So I think that they have to, part of it is political, part of it is the signal that, okay, we're going to do something to try to help affordability, right? Now, part of it is also they also want their intention. I can see their intention is to sort of stymie the excess investor money that's been flowing in. And that's what the APRA buffer rate action does. It affects the investment, the borrowing capacity of investors more so. So, just to put it very simply, those investors who have more than one property. So let's say, for example, Bob has got, he's got one property and he's looking to buy another investment property. All right, so now the bank will assess his servicing, applying this buffer rate, this artificial, say 6% buffer rate on both of his loans. That means his current loan and the potential property that he's looking to buy. All right, so that impact is it's magnified. In terms of how much that's going to impact his borrowing capacity, most calculations put that estimate at about 5%. So if you look at 0.3, we actually use an example, a very simple example. If he could borrow 600,000 previously. Now it's at 570,000. So there is some impact, but it's not a significant impact on his borrowing capacity. Sorry, Bob, you're on mute.
Sorry, I just say Chinese. 就是说，我们可以看到，就是有一些媒体说他们这个 buffer rate 提高了0.5%，可能影响并不是很大，但是我们实际计算了之后，其实影响也是还是有的。就比如说之前我们可以借到60万，现在我们只能借到57万，也等于有这个3万差距。那对于现金买家来说，可能影响不是很大，但是对于如果要是纯靠贷款这种本地的买家来说，可能影响还是其实有一些。所以我们接下来还听Shao看他怎么具体分析这个情况。Okay, go ahead, Shao.
Yeah, so as I was saying previously, the headlines that we just talked about regarding 20% raises, and especially in the last, I think they can see in the last quarter, I think it might be on the next slide. Yeah, so the lending data coming out of banks for the period of January 2021 to June 2021, there's been a big spike in borrowing for those that are above, borrowing at about, I think, 6 times earnings. So Bob, if you go to the next slide. Yeah, so you see here, more than 20% of the lending in the June quarter was more than 6 times pre-income tax. So this is also, you know, that sort of also triggered to APRA that there's quite a abundance of lending. So that's the reason why that's the reason why they want to make this action now. All right, so here what we want to touch on is unintended consequences. So, you know, often when regulators, government bodies make changes, whether they're monetary or fiscal, they can have unintended consequences. So, you know, in my opinion, one of the unintended consequences of this buffer, increase in buffer, is that it might actually harm those first home buyers. You know, those groups of people that they're actually trying to help. You know, so as I said, part of the purpose of this buffer rate was to try to put a lid on excess pricing, but the unintended consequences is that those who are very young, particularly those who are single, so single income earners, who effectively, in the bank's view, when they're assessing their serviceability, they're going to consider their living expenses. Those who are single will bear all of the living expenses on one income, right? So couples without children, they obviously will have much better borrowing power because they're sharing their living expenses. But those young people, right, newly graduated professionals, who actually we want them to borrow, or the government should want them to borrow and for them to purchase their first homes, those new graduates may be saddled with HECS debts, right? So, you know, commonly that's called a singles tax. Singles tax, which is it's more of a joke, is to say that these single people, in the bank's eyes, they often can't actually reach the serviceability criteria. And so this move actually sort of harms that a little bit. All right, so, and we can see on that graph here, we've got housing prices versus household debt, and you know, that's steadily rising.
Okay, Shao. And so the buffer rate has increased, and it does. You mean the first home buyer and the investors that has no impact so far because they have much the money or cash because they can refinance and or they can another cash or a saving. So what should we do in the next for the first home buyer or other the investor if they don't have much money to buy like a luxury or the blue chip the area?
Well, obviously they would look at more affordable properties. Which affordable now has a very different meaning to affordable 5 years ago. So now affordable means anything that's $1 million or a little bit under $1 million. I think most people in Melbourne would consider that very affordable.
Yeah. Okay, go ahead.
Okay. You want to go to the next slide?
Yeah, okay, sure. But it doesn't work. And okay, we got it.
Yeah. So as I said here, you can see from that graph in January to June, you can see the raise in debt to income ratios. So this is what triggered APRA to take action. In conjunction with those high sales prices that's been occurring in the last 12 months. And you can see here, we've also got a little graph here talking about the highest leverage postcodes. And I thought I'd just include that because it's quite surprising. A couple of the suburbs in Victoria, we're all familiar with, everyone knows Toorak, Canterbury. Those are, very expensive suburbs. And there's also Wheelers Hill, which is kind of a normal, an average suburb, average residential suburb. And yet these are the highest leverage ones.
Because of Chinese?
I don't know.
As far as I know, a lot of Chinese family or community that would like to choose Wheelers Hill. I'm not sure.
Yeah.
I don't know why. Because it's not convenient, the traffic. Because of the school zone, or not sure.
Well, it's near Glen Waverley, so it's kind of definitely. I mean, that's not a bad hypothesis because Glen Waverley, Wheelers Hill are nearby. Regarding the debt levels, I'm not sure why the debt levels are that high in that suburb. It's still a mainly white suburb, demographics wise. Yeah.
Okay.
All right. So this is the strategy behind investing in affordable housing. So look, roughly a few years ago, roughly 2 years ago, we made the strategic decision to pivot towards affordable housing and to diversify our portfolio so that we're more catering towards the affordable market. And you can see that in a couple of our projects at the moment, where we effectively are targeting, the 1 mil or sub 1 mil market, and also to diversify away from relying on investors and also relying on overseas purchases. So we really wanted to focus on the local market and also the first home buyer market. And there's a couple of reasons for that. Obviously, if anyone here who's been following property for a while, I've been doing property since 2007. So I've seen quite a few cycles, ups and downs. And if you remember the heat in the market in the 2017 era, right? So as a consequence of that, we pivoted away from that to move into affordable housing. So you see, one of the things that we identified was that there was a lot of government incentives targeting affordable housing. It's not a unique problem that we face in Australia. All over the world. China, America, Canada, a lot of these nations, they're having problems. So, the government has to do something to help them. And you can see with all the stamp duty exemptions, concessions, even the recent announcement of the $500 million Victorian fund, right, which is essentially allowing those first home buyers to purchase using only a 5% deposit, which is very significant. Because I would say, a large, even those young people, say 20, 25 years old to 30, they would definitely, I would say, the majority of them would have saved that 5% deposit, and particularly in the last year during COVID, where the savings rate has spiked, and that's been a global phenomenon because, the expenditure, the individual expenditure has basically been capped. No one can travel overseas, very limited eating, so naturally your savings has been boosted. So that's why I think that our pivot a couple of years ago has been quite timely, and hopefully we can capitalize that as we exit COVID.
Okay. So as far as I know, the Coburg, the housing median price has reached over 1.5 million, I think.
At least with $1 million, over 1 million. You're talking about Victoria, or you're talking about I think in Sydney, it's probably 1.5.
I mean the Coburg is not, because you're speaking of yeah.
Are you still on the same slide? Maybe you want to flip to the next slide.
Okay. Well, yeah, okay.
Oh, you mean because of COVID?
Okay.
So are you saying, has it spiked because of COVID?
Oh, you said COVID? I heard about the COVID.
I'm just saying COVID, yeah, it may contribute towards that.
Yeah.
All right, so now, we just touched on some of the strategies of why we wanted to invest in affordable housing. So there is obviously government incentives, and we've seen not only the stamp duty savings, the new fund that's coming out, but we feel that there could be further assistance from the government. But I think by and large, all the APRA changes, the changes in banking, it won't affect the if people can afford say the example we used before, about $560,000 or $600,000 in property. So if their purchasing power drops slightly, that $30,000, it's not really going to have an impact on them. And so if you look at some of our current projects where we've targeted that, so Coburg, Doncaster, and Bulleen, these are our three current projects where we are actively targeting that sub 1 mil market. And in particular, our project in Bulleen, that was we made a very conscious decision to decrease the dwelling sizes so that we would be able to deliver products sub 1 mil, or the majority of them are sub 1 mil. All right, so yeah, this question that you put to me, Bob, it's a good question, which is how to maintain project profit with current inflation. And I've had a lot of chats with a lot of people regarding inflation. And I think, well, first of all, I would just say that I think everyone can see that in effect at the moment, whether that's if you're buying groceries or, in our case, in the construction industry, there's been significant inflation, and whether or not those prices are sticky, and by sticky, I mean that it remains high even after all the supply chain issues are resolved, because at the moment, we've seen container prices go from $3,000 to $10,000 per container. So that naturally will spill over to the entire construction industry. So obviously, as I said, how to defend against inflation? Well, the best defense against inflation is investment in real assets being property or or shares. I think it's quite commonly known now that anyone who's leaving their money in the bank, that money is going to be eroded, and it's going to be eroded at a higher rate than it has at any point in history, because of the amount of currency that's been generated, that's been printed. This is a global thing as well, not just in Australia. So now, in terms of how to maintain our project profit, so that's a more micro question. Any projects that are currently under construction, those of course will not be exposed to construction inflation because it's a fixed price. So in fact, that's more of it's a problem that builders will have to bear. With the second point, which is, so projects that will be in construction shortly. That means there's going to be not only a material increase, a price increase in materials, but also wages. That will, in my opinion, will naturally translate into inflation into property as well. So the pricing of property. So for example, when we start a project, say Bulleen or Queens next year, and we expect to deliver that in, say, 18 months' time, to have the building complete. Well, by that stage, after 2 years, we expect the property prices to also increase accordingly. And part of that reason is also because during COVID, so say throughout 2020, there's been an unnatural suppression of supply, and that's due to a lot of projects couldn't actually get started because of that market uncertainty. So I mean, it's hard to believe how much time has already passed. Effectively 2 years. So, but if you rewind yourself back to the start of 2020, people weren't sure, what's going on with COVID. Some people were speculating property was going to go down and this and that. Obviously, it went the opposite direction. But because of that uncertainty, many projects that were supposed to start actually didn't start. So there's actually a lot of pent up demand, and we've seen that in recent auction periods. If anyone's been following auctions, we've had, and this is Zoom auctions, by the way, not normal auctions. So even, online auctions, the activity has been, quite frantic. And I think that's going to continue through next year as well, because of that supply being choked during the COVID period. And to compound that further, once the government opens the doors again to migration, or I should say, when they open the borders first. So in November or whenever it is, when they open the international borders, that's going to allow the natural migration to occur. But further still, we've seen the headlines coming out of New South Wales Premier stating that he intends to increase, well, he's going to lobby the federal government to increase the migration to at least double the migration intake to pre-COVID levels. So, we're talking about 2 million additional migrants over the next 5 years. So, there's some seriously powerful supply and demand force that's going to be acting upon the property market. And that's our view of things.
Okay, sure. Actually, this question is from some investors, and they're considering this question. Yeah, thank you. And one question from audience and from Lily, and she asked, will the Victoria regional suburbs be more attractive? Because the regional suburbs like Barrie, Bendigo, and the price I think has increased over 30% this year.
Yeah.
So what do you think?
Yeah, I think the regional price increase has been quite an interesting phenomenon, to watch over COVID. I think, in my opinion, the increase, obviously the starting base of regional Victoria was already very low to begin with. We're talking, prices that were $300,000 or $400,000. So in terms of percentage, yes, it is a large percentage increase, but whether or not that, that translates to continued increase once COVID, finishes, whenever that is, that remains to be seen. Because I think there's an argument to be made. They should increase. I think there's no reason why the regional areas can't be a little bit higher. But people will naturally come back to what are the reasons why these suburbs closer to the city have historically had good value, and a lot of that are things that are irreplaceable, such as schools. I think anyone in the audience who has children entering, even primary school, I should say, particularly in high school, they're always going to consider the quality of the school, the education, first and foremost. I mean, we think about our children before we think about ourselves, I should say. So I think that's, that the regional option can be there for perhaps those older people or people who, have that, they're in a different demographic.
Okay, yeah. Okay. 我不知道丽丽是否就是能够明白，因为我们今天预留了挺多时间给大家可以提供问答环节，因为Shao真的时间非常有限，连我是公司里的人都跟他沟通的时间都非常少，除非是我们去项目地，然后去学习去观摩，然后才有机会跟他沟通。大家有什么疑问，就是尽管无论是项目开发管理，还有整个房屋投资这一块，大家都可以尽管问Shao。相信留在现在的基本上英文都是非常好的，对吧？就是尽管就是你用中文问也可以，然后我可以翻译成用我有限的英文水平来给大家翻译给他，好吧？然后 Shao, you mentioned the educational source in regional suburbs. So, but as far as I know, there's some also famous the education like in Geelong, but Geelong is not cheap so far. It's not cheap. I think, yeah, it's not affordable.
Yeah, so you're talking about Geelong Grammar. There are a few suburbs, Ballarat. There's a few standout schools as well.
Yeah, but so that's, and also I think the another reason is the work from home. So they would choose in the regional area, to buy a house.
Yeah, correct. And I think a lot of, I just remembered a funny conversation I had with a friend sort of middle of last year when, some of the staff decided to buy some property, in regional Victoria. But then, their bosses said, well, yeah, you can work from home, say 1 day a week or 2 days a week, but you still need to work from the office. So I think those people, you probably want to wait a little bit to see how, how the workplace evolves, because I think people are still finding, I think that's even true for our own business, that there's certain communication that is difficult to occur strictly, remotely. A lot of communication is lost, in that regard. So I think it's sort of TBA. We got to see what's going to happen next year. See how businesses respond. There's certain industries obviously where remote working is not only possible, but it's actually probably preferred. Like a lot of the IT, programming jobs, I can see that working well remotely. But I think that's, like I said, time will tell.
Okay, thank you. And another question. Okay, and so Shao, what do you think the APRA and RBR the policy in the next if the buffer rate doesn't work? So because I heard some clients, they are talking about the buffer rate, it doesn't make sense, only 0.5%.
That's what I said. That's the reason why I said at the very beginning of this presentation, part of it is political. Part of it is just a token. It's a signal to the population that something's happening. I'll put it this way. Regulatory bodies, government, RBA, APRA, they haven't had a history of being able to control the market. If you look back at the very biggest change that APRA did in 2017, let's talk about March 2017. APRA's most heavy-handed actions. We're talking about restricting the amount of interest-only loans, right? Putting pressure on, that's by far one of the biggest moves that APRA can make. Discouraging interest-only loans, capping those investment-type loans. And, if you look at it historically, that definitely had an impact initially. So it had an initial impact, but you have a look over the last few years, the market that's been soaked up completely. It's virtually had no impact. And that is a much more severe impact to, a 0.5% buffer rate. So I think, the investor that you were speaking to is correct. It's very little impact.
Yeah, just so they may take some further action to affect a little bit the market.
It's possible, but as I always say, you have to look at who has the incentives to, so the regulatory bodies has the incentives to maintain property prices, because those are the wealthy people anyway, politicians and the industry people that effectively, control the politicians. They're all incentivized to maintain asset prices. Every now and then you'll see a dip, but you look at the trend, it's always going up.
Okay, and one more question. And say, a client asked me, is this a good price to buy the apartment in CBD, Melbourne CBD? And then when the market is returning, like overseas, the students or with travelers, they come back, I think it's good, the cash flow. What do you think?
Melbourne CBD, I wouldn't rush to do that. CBD is probably, there's still been a lot of new developments happen in the CBD, even during COVID. And I think that I think a lot of it also depends on the retail traffic, to actually revitalize the city. So there's a few things that's going to impact that. Obviously, migration, right? How students react, right? Part of it is the China-Australia government relationship as well. So if you look at those multitude, there's a lot of things that can impact whether the city apartments are, will become attractive again. So I would say at the moment, I would be careful. I'll probably just watch and see what happens. Yeah.
Just watch and observe market. Yeah. 值得说的就是我们对于墨尔本 CBD 的这个 apartment 我们是基本上从来不碰的，就是经常有客户问到我们就是不是一个抄底的时候，然后未来等他们回归，包括移民学生还有游客，是不是一个好的现金流？但是可能未来你的支出应该也不会少吧。Okay.
And Bob, just quickly on that point as well, I think it's also, I think it's quite evident COVID has sort of triggered a sort of decentralization. So either people are working from home, or people may not be working from home per se, but maybe they're going to be working in offices closer to where they live. So I think we've seen this concept of decentralization away from the city. So that's another reason why I would be very wary of investing too heavily in the city.
Okay, thank you for your presenting in detail. And okay, 那我们我看没有其他问题了。然后 OK， 又有个问题。Okay, and many last ones from Sherry, and many Chinese investors would like to invest Box Hill, and Box Hill High School zone is more advantage than Glen. So what do you think of the Box Hill?
Well, I'm biased because I went to Box Hill High School.
Okay.
So I'll take credit for their reputation going up. No, I'm kidding. Box Hill, I think in my opinion, it's still at the moment it's still the second CBD. When I say second CBD, there's so much infrastructure that's been built around Box Hill. So you've seen the ATO building, you've seen a lot of commercial buildings around that region. So I think I'm hopeful when the borders open up again in November, when people can actually travel from overseas to come back, that it will be a more revitalized suburb. In terms of versus Glen Waverley, look, Glen Waverley is, again, it's also a very high proportion Chinese suburb. It's not as far, it's not as close to the city as Box Hill. I would say it's got similar advantages to Box Hill, yeah, because they also have good schools and good shopping centers.
Yeah, do you think in the near future more and more the government department will move to Box Hill?
I think so. I mean, I think that's what I mean by the decentralization of it, because if you think about it, it actually makes very little sense to have all of your just think about the amount of energy that's consumed in traveling. All right, every day everyone's traveling 40 minutes to the city, 40 minutes back. It's highly inefficient, and it puts a huge amount of burden on our infrastructure. So I think most likely what they're going to do is they're going to continue to, like we've already talked about, the upgrades to the train stations. Once they complete the loop, then people can travel within the suburbs. It makes more sense to have hubs. Maybe a couple more hubs. In our region, southeast, maybe there's a hub here. There's a hub. Like Box Hill becomes another hub. Yeah.
Okay, cool. That's good idea. OK， 那因为时间关系，咱们今天分享就到此结束吧。然后，如果大家有兴趣的话，可以扫描一下这个 PPT 右下角的这个二维码。然后，这个直播我们基本上是保持每个月一次，然后对一个上个月的一个总结和回顾，然后以及一个展望，然后以及未来我会请一些更多的专业的跟房产相关方面的专家，然后跟大家来进行一个分享，好吧？然后谢谢 ，Thank you for your time and thank you for your attendee audience and have a good night. See you.
Thanks everyone.
Okay.
Bye.
Bye.